Datavault AI Inc., trading under the ticker DVLT on the NASDAQ, is currently sitting at 0.82 USD per share as of the early trading hours on Wednesday, December 24, 2025. We are seeing a slight pre-market uptick of about 0.50% following a sharp double-digit decline in the previous session, where the stock shed over 13% of its value. Today is a shortened trading day due to the holiday, and the volume is already showing signs of significant activity as investors digest a massive catalyst, the Dream Bull 2026 meme coin to eligible shareholders, which officially begins today. While most retail traders on a typical trading platform might see a penny stock struggling to maintain a dollar, the reality beneath the surface is a high-stakes experiment in how blockchain technology can fundamentally change the way we value and trade intellectual property. The gap between what the market expects and what is actually happening with Datavault AI is wider than most people realize. The common narrative is that this is just another volatile microcap chasing the latest tech trends to stay relevant. After all, when you look at the raw financials, the losses are staggering, and the cash burn is enough to make any conservative investor on Fidelity Investments nervous. But the insight you might be missing is that Datavault is essentially trying to build a new financial plumbing system for the data economy. Just yesterday, the company announced the issuance of 2 foundational patents that cover blockchain-driven content licensing and real-world asset tokenization. This isn't just a press release, it is a move to claim the intellectual territory that major banks and media companies are currently treading on. While the stock price is languishing near its 52-week lows, the company is quietly setting up a legal and technological moat that could force some of the biggest players in the industry to pay up or risk litigation. If you have been watching the broader market, you know that the focus has mostly been on giants like Nvidia stock or the steady climb of Apple stock. Those are the safe havens where people put their money when they want stability. However, the movement we are seeing in DVLT today suggests a different kind of appetite. We are seeing high-frequency trading and speculative volume that typically precedes a massive shift in sentiment. The expectation was that the Dream Bull meme coin drop would be a non-event, a gimmick to distract from the negative net profit margins. The reality, however, is that this is one of the first times we have seen a publicly traded company use a digital asset distribution as a direct mechanism for shareholder rewards, effectively bypassing traditional dividend structures. This is the kind of move that savvy users on interactive brokers or those managing their own individual brokerage accounts look for when they want to find an asymmetric risk-to-reward setup. When we look at the recent stock movement, the daily swings have been nothing short of violent. In the last week alone, we have seen intraday fluctuations of nearly 20%. This level of volatility is a nightmare for anyone using a robo-advisor like those found in Schwab Intelligent Portfolios, which are designed to minimize this exact kind of exposure. But for the self-investing crowd, these swings represent opportunity. The institutional activity has been minimal, with less than 2% of the float held by big funds. This means the price is being driven almost entirely by retail sentiment and internal corporate actions. We have seen significant selling pressure from insiders over the last 90 days, totaling nearly $1 million in liquidations. Normally, that would be a massive red flag, a sign that the ship is sinking. But if you look closer, these sales are occurring alongside a massive influx of capital from strategic partners like Silex Holding Company, which recently finalized a Bitcoin-denominated investment in the firm. This brings us to a crucial point about the current market momentum. The sector momentum for AI and data management is strong, but Datavault is carving out a niche that doesn't quite fit the standard mold. While people are flocking to Robinhood stock trading to get a piece of the next big thing, they often overlook the technical structure of these smaller players. DVLT is currently oversold on the relative strength index, sitting at a level that historically precedes a bounce. The tension here is between the dismal current earnings and the aggressive future guidance. Management just raised their 2026 revenue forecast to over $200 million. To put that in perspective, their trailing 12-month revenue is barely over $6 million. That is a massive mountain to climb, and the market is currently pricing in a high probability of failure. That is the expectation. The reality is that if even one of their major licensing deals with organizations like the World Boxing Council or their sports data initiatives gains traction, that revenue target becomes much more than just a dream. Let's talk about the business model for a second, because it is more complex than just AI. Datavault operates through two main divisions, acoustic science and data science. The acoustic side, featuring their WISA and Sumerian technologies, is focused on high-end wireless audio and multi-channel sound transmission. It's a solid, albeit niche, hardware and software play. The real growth engine, however, is the data science division. This is where they use their information data exchange to create digital twins of real-world assets. They're essentially creating a secure way to attach metadata to physical objects, allowing for the legal and financial monetization of things like name, image, and likeness for athletes. Think about the potential there. Instead of just a one-time endorsement deal, an athlete can tokenize their personal brand data and receive recurring royalties every time that data is accessed or used in a commercial context. This is why they brought on people like Hockey Hall of Famer Jeremy Roenick to lead their NIL exchange. They're not just building tech, they're building an ecosystem. When you look at older reports, you can see the progression from a struggling tech startup to a company that is aggressively acquiring intellectual property. They now have over 70 patent assets. In the world of tech, patents are the ultimate leverage. If their claims about major banks infringing on their exchange technology hold water, we could be looking at a future defined by massive settlement checks rather than just operational revenue. This is a strategy we have seen before in the tech world, and it's a long game that requires a lot of patience and a high tolerance for risk. For those of you navigating the world of online investing, whether you're using a Fidelity mobile app or checking your positions on the Robinhood app, it's easy to get caught up in the daily noise. But the institutional lack of interest is actually a double-edged sword. On one hand, there is no big smart money floor to catch the stock when it falls. On the other hand, if Datavault manages to hit even half of its revenue goals, the institutional rush to get in will create a supply squeeze that could send the stock multiples higher. We have seen this play out with other small-cap tech firms that were once dismissed as unprofitable. The key is to look at the trading volume. When you see 70 million or 100 million shares changing hands in a single session for a company with this small of a market cap, you know that something big is brewing behind the scenes. Comment below how many shares of DVLT you are currently holding, or if you are planning to wait for a dip below the 50-cent mark before entering. Your engagement helps us understand the retail sentiment that is truly driving this stock right now. Looking toward the future, there are several catalysts that could act as a trigger for a massive breakout. First, there is the Dream Bowl 14 in January. This is not just a football game, it's a showcase for Datavault's technology in a high-pressure, high-visibility environment. If the national broadcast and the associated tokenized fan engagement are successful, it provides immediate proof of concept for their entire business model. Second is the ongoing litigation and licensing strategy. Any news regarding a settlement with a major financial institution would be a massive win for the bulls. And finally, there is the Bitcoin factor. By accepting investment in Bitcoin and engaging with the crypto ecosystem, Datavault is positioning itself to benefit from the broader adoption of digital assets, a trend that is already being embraced by platforms like SoFi Active Investing and Interactive Brokers Trading. However, the risks are just as significant. The company is losing a lot of money, and if they can't scale their revenue quickly enough, they will likely need to go back to the well for more capital, which would mean further dilution for current shareholders. This is the reality that often clashes with the hype. If you are using a self-investing approach, you have to be disciplined. This isn't a stock you buy and forget. It's a stock that requires constant monitoring of the regulatory environment, the company's filings, and the overall health of the AI and blockchain sectors. For those looking for investment help, it is often better to look at diversified options like Fidelity ETFs or Fidelity mutual funds. But for the aggressive trader, DVLT is one of those rare names that offers a front-row seat to the collision of traditional finance and Web 3.0. In summary, the central tension for Datavault AI is between its current financial fragility and its ambitious technological vision. The market expects a slow decline into obscurity, but the reality of their growing patent portfolio and strategic partnerships suggests a company that is playing a much larger game. The stock price of 0.82 USD today is a reflection of fear and uncertainty, but it also represents a point of maximum pessimism that contrarian investors often find attractive. We have seen revenue growth of 144% year over year, which is a clear signal that there is demand